What's going on, everyone? Welcome, Rabid here. And Bitcoin mining is getting worse and worse and worse. So it's looking like Bitcoin miners are losing $19,000 on every Bitcoin produced as difficulty drops 7.8%. Now, this is geared towards the large mining farms, as it seems like a lot of them are beginning to shut down, which could be good news for us. So, anyway, the average production cost was sitting at $88,000 per Bitcoin in mid March, according to Check on Change Difficulty Regression Model. Scrolling on down here. Now, here's a quick summary of what to know. And if you are looking to stay up to date on all the latest cryptocurrency news and mining and hardware, obviously hit that subscribe button, like button, share the videos around. Also, head on over to rabidmining.com. You can come into here and simply go to crypto here, cryptocurrency news, and it will keep you up to date on all the latest things that are happening. So this is another option for you to use. Now, coming back into here, what to know? Bitcoin miners are operating at steep losses with average production costs around $88,000 per coin versus a market price near $69,200 as rising energy prices and war related distributions squeeze margins. So, obviously, that's not good. Trump is pretty much making everybody lose money. Moving on here, we got geopolitical tensions in the Middle East, including oil above $100 and the effective closure of the Straits of Hormuz. That's where all the oil and stuff has to go through, obviously, and are driving up electricity costs and contributing to falling hash rates, slower block times, and sharp drops in network difficulty. Strained mining economics are forcing miners to sell more Bitcoin and push into AI and high performance computing for steadier revenue, adding pressure to a market already weighed down by underwater holders and heavy leverage. Are you looking for ASIC miners but just not sure who to trust? From most popular brands to best sellers to miners of the week and even deals of the moment, ASIC Mining Central has you covered to the cheapest prices out of any ASIC website, as well as import fees will be low with low tax with DDP or invoice, and code RABID will grant you an additional $50 off your order. Head on over to ASIC Mining Central today for all your ASIC mining needs. Links down in the description. Now back to our regular scheduled program. So, how you guys doing? Are you currently mining Bitcoin? As most of us home miners can't really do it due to these power costs. Some of us are lucky with cheap power. I, unfortunately, am not one of them. But the math has turned against Bitcoin miners, and the war is making it worse every week. Check on Change Difficulty Regression Model, which estimates average production costs based on network difficulty and energy inputs, pegged the figure at $88,000 per Bitcoin as of March 13th. So I don't know what this is based off of. If you know, let me know down in the comment section, as the world seems to run off the USA. It's probably in USD and what it costs the USA to mint Bitcoin. But there are places that can mint Bitcoin for like under $2,000 with like next to free power. It's pretty crazy. So I'm assuming the numbers are coming from the USA, but remember, there are a lot cheaper places that are mining Bitcoin at, hardly any, I guess, costs to mine it when it comes to the power side of things. Bitcoin is trading at 69,200 as of Sunday, creating a gap of nearly $19,000 per coin, and meaning the average miner is operating at a 21% loss on every block mined. The cost squeeze has been building since October's crash took Bitcoin from 126,000 to below 70,000, but the Iran war accelerated it. Oil above $100 feeds directly into electricity costs for mining operations, particularly the estimated 8 to 10% of global hash rate operate in energy markets sensitive to Middle Eastern supply. So there's kind of a chart here, and you can run through it if you want, or you can just ignore it like I usually do and continue on. The Strait of Hormuz, which handles roughly 20% of the world's oil and gas flow, remains effectively closed to most commercial traffic. Now, it's technically open, but if you kind of go through there, you're at very high risk of getting blown up. So, for most people, I believe it's closed. And Trump's 48-hour ultimatum on Saturday, threatening to attack Iran's power plants, added a new layer of risk for miners. Now, Trump's just threatening, trying to be the bully, and obviously, I don't know, he must not have learned anything yet. It's just my 2 cents. Iran doesn't care what he says, so it's just gonna keep going on and on and on, and it's just gonna get worse and worse. So anyway, the network is already showing stress. Difficulty dropped 7.76% on Saturday to 133 trillion. The second largest negative adjustment of 2026 after February's 11.16% plunge during Winter Storm Fern. Difficulty is now nearly 10% below where it started the year and far below November 2025's all-time high of nearly 155 trillion. The hash rate has retreated to roughly 920 exahash, well below the record 1 zettahash level reached in 2025. I believe it hit 1.1 zettahash or something, according to Mining Pool stats at one point in time. But average block times during the last epoch stretched to 12 minutes and 36 seconds, well above the 10-minute target. Now, if you're unfamiliar, how that works is Bitcoin's difficulty adjusts. Usually it's average every 2 weeks, plus minus a few, because it's based on X amount of blocks found between each epoch. So if hash rate falls off the network before a difficulty adjustment, the blocks slow down because there isn't as much hash rate there. So it takes longer to find those blocks, and it takes longer to adjust the difficulty, and the blockchain in general just slows down because the blocks aren't being found. So that's actually bad for Bitcoin. Higher fees, higher chance of people hacking more money out of people that are utilizing Bitcoin, and things like that. So you got to be really careful and look around at what's happening here. Now, once the difficulty adjusts, and if the hash rate maintains the same, then it's back to that 10-minute there, because it adjusts based on the amount of hash rate is online. Now, if more hardware comes online during that downward difficulty adjustment down, blocks will be found faster, the blockchain will be faster, and the next epoch and difficulty adjustment will actually happen faster as well, and then it'll increase the difficulty. So that's kind of, in a nutshell, how that all works. So all right, so here you can see, just how the last few adjustments did go through on the Bitcoin difficulty. Here we went up 3%, then we went down 2%, down 11%, up 14. You can see, obviously, here a bunch of hash rate came on, so it boosted that up. That's probably when that snowstorm was over as well, and this is when it was on. And then now we're seeing another decline in those hash rates here. So 7, 8, 9, 10. So we're at about a 10%, about 11% drop here, 11.6 or something, I guess. So we're at about this level here. So we're almost lower than what we were here. If the next adjustment ends up being another negative, we're going to be at some pretty low difficulties here. But again, it's still pretty darn high for us home miners. Anyway, hash price, the metric tracking expected miner revenue per unit of computing power, is hovering around $33.3 per petahash per second per day. According to Luxury's hash rate index, there's near break even for most hardware, and not far from the all-time low of $28 hit on February 23rd. When miners can't cover costs, they sell Bitcoin to fund operations. That selling adds supply pressure to the market, already dealing with 43% of total supply sitting at a loss. Whales distributed into rallies and leverage positioning dominated price action. Mining economics aren't just a sector story, they're a market structure story. So I know these guys are smart, and they got analytics and all these smart people in smart places. They should have seen that the 4-year cycle is still a thing. And why didn't they sell more in October when it was peaked? That way they would have a lot more during these bad times. Does that kind of make sense? But then again, if power prices are going up, it's costing them more anyway, and it's just, not looking good. Continuing on here, here's where they're kind of justifying their farms now. So the publicly traded miners have been adapting by diversifying into AI and high performance computing, which offer more predictable revenue than mining Bitcoin at a loss. Marathon Digital, Cypher Mining, and others have been building out data center capacity alongside their mining operations. The next difficulty adjustment is projected for early April and is expected to decline further, according to CoinWars data. If Bitcoin stays below 88,000 and there's no sign of a return to that level in the near term, the miner exodus continues and difficulty keeps falling. And based on the cycles as well, we could see a 35 to 50K Bitcoin by October, which is usually where the bottom is. So we're going to be well below this $88,000 mark here, almost 50% lower, which is pretty crazy. The network self corrects by design, making it cheaper to mine as participants leave. But the period between when costs exceed revenue and when difficulty falls low enough to restore profitability is where the damage happens, both to miners and to the spot market that absorbs their forced selling. And one more quick search here in Brave. If you just put in Bitcoin miners giving up, we can see, and it kind of sums up everything we just read in a nutshell, though. But Bitcoin miners are increasingly exiting or shutting down operations due to severe economic pressures. As of March 26, the average cost to mine one Bitcoin surge, we've seen $88,000, and the market is hovering around 60. That's almost the same exact same thing we've seen. So what's going on here is this unstable gap has forced many to unplug their equipment, especially the mid-tier rigs like the Antminer S19 XP Plus and What's Miner M60Ss, which are near or below their shutdown prices, the point where operating costs exceed revenue. The network's difficulty dropped 7.8% in March on the adjustment, the second largest decline in 2026. So that's pretty much going through everything we just read. But yeah, we can see that it looks like the average of what they're basing it by is about $88,000 Bitcoin is like their break even. Obviously, we're below that, so everyone is losing money. But again, I'm assuming those numbers are just coming from the US, and there's other countries that are mining Bitcoin much cheaper than that. Alrighty, guys. So that does wrap up this video. So let me know your thoughts and opinions on the whole situation with Bitcoin mining. Are you starting to look into it? Is it showing up more to you in your feeds and other things than it used to? Or are you just kind of hanging low and don't know what to do as crypto mining is becoming pretty crazy and a lot harder to do these days compared to back in 2021, where we just fired up some GPUs and threw it on Ethereum and called it good. Things are a lot different now. Bitcoin mining in general is never good for home mining, but it is looking a little better as these large mining farms do start to turn off. Let me know your thoughts and opinions. Links to ASIC miners and all sorts of other things down in the description. I'll see you in the next one. Hit the subscribe button, thumbs up, Rabid out.